Good morning, traders. So today is July 16th, and we are making our daily recap for today. Today is another green day, but unfortunately, the market has been very slow and choppy. So it's a
DSC.
small green day. We traded IQST, and we're going to break down what I saw, what I thought about it, and how we locked in $520 today. Okay, so let's start off with IQST. This morning, it gapped up on news. It started around 90 cents. It had this huge push from about 90 cents to about $1.20. Now, this candle here happened on a lot of volume. I'm not sure why it only says 900,000 shares, but this subsequent candle was about 10 million shares. Now, 10 million shares is a lot, considering the fact that this stock only has a flow of roughly about 600,000 shares. So, with that in mind, you can kind of see the wick at the top, but also it tried to immediately reject. So it faded right back to a dollar and it left a really ugly tail at the bottom. When I saw this, my first instinct was this is going to be a very choppy stock. If you're going to short it, you have to short at the highs. And you're going to have to be very quick because typically these stocks do like to fade to a dollar and below. But when you have such high volume in the early morning, typically I find that they become really choppy. They'll hit SSR because someone or somebody is trying to dump the stock and it doesn't work. And then it just pops back up and it just holds the entire day. I've gone into so many of these and I absolutely hate trading them. If you watch my previous videos, some of my biggest red days of this month was trading sub $1 stocks.
Click.
So, with nothing to trade, I kind of took a stab at this one. I went in small with the realization that, like, we're not going to make a lot of money, we're not going to lose a lot of money, but we have to contain our risk. So, when the morning push happened, it rejected $1.24. Now, at $1.24, I realized if it's making a double top and
Drop.
maybe a triple top, okay, we can try it. I shorted around $1.16, which in hindsight, looking back, looks absolutely terrible. But it wasn't so bad at the time because there was a lot of momentum on the downside. So I actually shorted on, I think it was this candle here. I saw the rejection at $1.20. I shorted at $1.18. It kept going lower, so I ended up filling at $1.16, about 3,000 shares, and it faded to about $1.10. I didn't take any profit because at this point I had such small size and I just wanted to see if it'll break down below $1.10, maybe hit a dollar, and it'll be a decent green day. It didn't. It popped off $1.10 and it pushed higher. Now, when it broke $1.20, I wasn't too worried because again, like my average wasn't the greatest, but it was
CD.
acceptable because I had a really small size. And I knew the psychology behind the stock. It's going to break $1.25,
SYNX.
$1.24, and then it should fade back down. Now, after this push, I saw $1.32. Now, $1.16 to $1.32, I was down about 500 bucks. And I told myself, if it continues higher, I will get out. I noticed that this area here was getting stuffed. Every dip was getting bought
PSQH.
up and every push was getting sold back into. So I was relatively confident in my position that it will eventually fade back down and if it doesn't fade back fast enough, I'll probably
See
just
it.
take a smaller loss. I ended up adding after this failed push to $1.38 and it came back down. This shooting star said, well, you know what? I typically don't like averaging out, but in this situation, I can try it. Because if I'm wrong, I'm just going to get out $1.32, $1.33, and I'll lose very little amount of money. I added $1.30, so my average at this point was about $1.22, $1.23, and on this flush to $1.10, I knew it was going to tap $1.10. I didn't know if it was going to break below it, but I had a pretty good feeling that I was going to tap $1.10 because this is the previous low. And with that much volume, typically it might tap $1.10 and might pop back up. So I got rid of 2/3 of my position at $1.14. And after that, the stock went relatively flat. It didn't really move too much. And I was thinking, you know what? You only have about 2,000 shares left. your risk is relatively small. At this point, I was green about $600. If it breaks out above $1.20, I can still manage it, but I am expecting a slow grind down to $1.10. So typically with these types of stocks, when the market opens, it typically has a big flush down. And if that didn't happen, I was looking for a quick pop and fade. So this quick pop to about $1.28 and fade back to $1.14, I exited all my position on this dip. I think it was like $1.18 that it got out. I just saw this mini consolidation. The top of it was about $1.18, $1.20, and I just exited. So I got most of my position out at $1.12. I got most of it out at about $1.18, and average exit $1.15, $1.16. You can see what happens after that. It just got really, really choppy. It left the doji at the bottom, tapped off support, pushed back to the high, slowly faded back down, slowly grinding back up. It was just going to be a really, really choppy stock. I understood this, and I kept my risks small just because there was nothing else to trade. This is not a good reason to take this trade, but I understood what I was getting myself into. I understood the amount of money that I was willing to risk and the risk associated with it. Now, the only reason why I even decided to trade this ticker in the first place is because very recently it had a 25-to-1 reverse stock split. And I checked with AI, I did some research on the stock. They've been buying up a lot of companies with high revenue, but they are burning through money. They're burning through cash. So the fundamentals are pretty bearish. But this candle right here, I don't know if you can see on the screen, but this 10 million share candle had a float rotation of about 15 times. So there is so much churn in this stock. And you can see that the daily volume, every 5 minutes, there are so many shares being exchanged. This is 8 million shares. Even after the market opened at 9:50 10 a.m., this is 6 million shares. Again, a stock with very low flow and very high churn. It's going to be a very choppy day. It's going to be a very choppy stock. There are so many people who are in this. So with that in mind, I said, we'll take a small green day and we'll walk away. If we lose some money, just make sure it's contained. I don't want to lose $2,000 or $3,000 on a stock that I have no business of making that much money in. So let's look at my trade zero charts. I'm going to show you my actual P&L and my actual trades and history. First short, 3,000 shares, $1.16, added $1.29, and then I started exiting my position at $1.11, $1.12, $1.13, and I had a tiny bit left, 2,000 shares. I ended up exiting at $1.18. So that's my trade for today. There weren't too many tickers moving. Today was another slow day. I did see VRAX. Now, this one, I considered shorting this. I think it was this pocket right here at the breakdown below $4. But the borrow fees were really high. And seeing what happened last time, I just wasn't too confident in the stock. Just because it has the potential to make a massive push. But when you're shooting at $4 with really high borrow fees, and it only faded about 40 cents after that, there is not much amount of money you can make. I mean, you can set the risk level 1-to-1 maybe at 450 and 350, but once the borrow fee sets in, once the commission sets in, and also don't forget, this stock is also on SSR. If it's on SSR, I just don't even want to touch it. So with that said, my max risk was maybe 1-to-1, 350 and 450 if I short at $4. But with SSR, I'm also getting slippage too. So I thought about it. I mean, the only way I would trade this was if I can get it below 350. And I really did not think it was going to fade below 350 today. So I just left it alone. There were a few other ones moving, but generally speaking, today was a very, very slow, choppy day. I tried checking RUBI. This one was really nice. After the opening market, it just dumped 50%. RUBI was 30 cents. VRAX was 15 cents. I ended up trading IQST, which was 1 penny. It's still relatively high, but it's not as bad as the other ones, because if I were to take any meaningful size, for example, let's say I take VRAX. If I'm risking 1-to-1, I mean, I'm paying 15 cents upfront, another 1 or 2 cents for slippage, another 1 or 2 cents for commission. So we're up to 20 cents. And if the maximum I could have gone was 3.55 and I'm shorting at $4, I'm making 45 cents, but I'm paying half of it in commissions. And the most amount of money I could possibly risk was 4.50. So really, I'm getting 20 cents, but I'm risking 70 cents. It just didn't make sense. The math wasn't adding up. So I left it alone. So today I only trade IQST, and you can kind of see right now it's still grinding up. My average exit was $1.14, which looking back is actually pretty amazing since this stock refuses to break $1.16 and is still above $1.20 and still grinding. It has 112 million shares on the day. So with that said, I mean, we'll take the green day, and we were walking away with $520. So that's it, guys. That's my recap. Hope you guys enjoy, and I'll see you guys in the next one.